Okay, so one of the most important things in the real estate business is working with buyers, right? Because buyers will eventually become sellers and become buyers again. And also, typically when you're a new agent, you're going to get more buyer opportunities than listing opportunities. Find that to be true,
Yes.
Joe and Paul? So, and Deanna too, yes. So that's usually the way it is. So from the buyer qualification standpoint, what we're going to do is we're going to go over some questions to ask, and then maybe you guys can come up with additional questions to ask. And then also you need to be prepared to answer questions that buyers are going to ask you on the flip side, right? So that you build rapport and also you build credibility, and then you get new clients. So Josh is going to be here today. He's with MBB Mortgage. You've been working with us now for how many years? 8? 10 years? Wow. When he was very young. And there we go. Hey, Connor. How are you, bud? Good. He's going to go over FHA financing because in a lot of cases, first-time home buyers are going to run into going to be FHA, as well as how to qualify buyers. So it's always good that when you sit down and you meet with someone, that you know how to qualify them. A lot of people say, hey, if you want to find out what you qualify for, call my lender. And as Joe's shaking his head, we know that is one of the worst things to do. And tell us why, Joe.
Because, well, first of all, I think you just lose them. I mean, you lose them and you lose control of the situation, number one. And number two, when they speak to you, you can help them overcome objections, because you might send them to a lender that might not be the right lender for them, you know?
Right.
There might be other reasons, but you appear knowledgeable by being able to pre-qualify them. You develop a relationship further, and you can help guide them to the right situation.
Right, the right loan product.
Right.
And then also, typically, there's certain wheelhouse loans that you have that other people may not have.
Right.
Loans that you do more frequently, so it also helps you in that regard. And then also they say, oh, I've got my buddy's Billy who's a lender, and then buddy Billy sends them to another realtor. Right? So if you can build confidence in them, or build your confidence in them, and they're trusting you that you know all aspects of the business, are going to be less likely to go someplace else.
And furthermore, you can call your lender and say, you know, this client's going to be calling. I have some information that this is their income, this is their credit challenges. Be prepared.
Right.
So.
Right.
Yeah.
So it's a two-way street that way.
That, and also a lot of these guys will come in, just like Scotty said, with friends and the family and the lending business. And there's a lot of lenders out there who aren't very good at their job, right? So they might start with somebody like that and feel like they've hit a dead spin, and there's plenty of options out there for them. So it's easy. It's really good for you to be able to overcome those objections and get them to your person.
Right. So just this whole process we're going through, you know, knowing the contract, knowing financing, knowing the home inspection process, knowing the settlement process, the more that you can communicate your value to clients, the more likely those clients are going to be to stay with you and then also refer you in the future. And I think that a big piece of the puzzle is knowing all the different types of lending products that are available, how to qualify people, so that you can, again, help them go in the right direction. Because sometimes it could be lender-funded MI, sometimes because of credit challenges, it could be FHA, any number of things. And a lot of times, agents don't ask their clients if they're a veteran or if they served in the military. So,
You'd be so surprised at how many veterans are working in the private sector who have access to those type of loans.
right, people that you wouldn't even think of.
Especially if you get down to Stafford, Quantico area.
Right. So, number one, you want to set the meeting with the client, right? You want to get a firm commitment to meet with you, and you want to be prepared. So you want to have a list of questions that you want to ask them. You want to have a home buying process that kind of keeps you on track as to what you're going to be doing throughout the process. You want to be on time. And one of the most important things, I think, is you want to meet the people in the office. If you meet them at Starbucks, what happens? Oh, Paul, what are you doing, Paul? And interrupted. Or somebody comes up to you and says, hey, Joe, what's going on? Da, da, da. And people will interrupt you and you'll lose the flow. If you meet them at their house, the TV will be on, their kids will be playing, there'll be distractions. Also, by meeting people at the office, it shows that you have a professional environment to meet them in, and that you take this seriously. And also, it builds commitment on their part to come in and meet with you at the office. If they say, hey, no, just meet me at the house, or just meet me here, it's more convenient, they're not going to be as committed as someone who takes the time to meet you at the office. So again, I think meeting at the office is huge. You're all online now. But again, I think this initial meeting face-to-face, and your dad is a huge proponent of this too. If people don't meet with him at the office, he won't take them on as clients, right? So I think that's good. So, questions you want to find out: do they own or do they rent? Have they bought a house before? It could be somebody that bought a house in another state, or they currently own their home. If they did buy before, what was that process like? You want to know what their experiences were. And then in addition to that, what are their expectations of you? There's so many people out there today. Well, I saw on Redfin that they give 2% back. Well, if they're expecting 2% from you, you want to know right away versus after spending 3 weeks with them in the car and say, well, I want you to give me money back. So you want to get those expectations up front, how they want to be communicated with, how often they want to be communicated with, what their availability is, and what your availability is to them. Also, you want to find out how familiar they are with the home buying process, because even if they did buy a house, it could have been a long time ago. So they may not be as familiar with everything today like it was back then. So in this home buying process, it kind of goes through and explains how you work. How you work by referral. You work, primarily with people that know, like, and trust you, and that kind of thing. You're not spending tons of money going out trying to get new leads and find people, or however you work. You want to give a market update. Talk about housing inventory. Right now, housing inventory is low. You can go to getsmartcharts.com and get information on the market for free. You can talk to other realtors. You can come to real estate exchanges to get that information. But basically, give a general information on the market so that they know that you're involved in the business and you know what you're talking about. And also, you can talk about the interest rate environment and what's been going on. Part of this being prepared is going and doing this due diligence up front so that it comes to you naturally and you can speak to it effectively or efficiently. So if you're going to have a meeting, you ask Josh, hey Josh, what are interest rates? What are the good loan programs right now for first-time buyers, if the people are first-time buyer, or whatever the case might be? So you want to talk to lenders before you do that. Then you go into the loan process and what's going to happen with the loan. And Josh is going to ask you for everything 15 times because it's not Josh, it's the underwriters. And so for them not to get upset with the process, that the process is different than when they bought last time, or if they haven't bought before, they have to know about that. But this typically is when I would go into pre-qualifying them, asking them their income, their debts, what those debts are, what they think their credit score is, how much money they have saved up, how much money they have access to, because they could be getting a gift from a family member, or they could be borrowing from a 401k, something along those lines. So you want to ask all those questions during this time, and then ask them what they feel comfortable with their mortgage payment becoming when they become a homeowner and things along those lines. So this is where I go through that process of loan qualification that Josh is going to get into.
Another question I'd urge you guys to ask is, have you ever had a short sale bankruptcy or foreclosure? Because we're starting to see right now a huge wave of what we call boomerang buyers, where they had a short sale bankruptcy or foreclosure 2, 3, 4, 5 years ago. So that makes a huge determination on what loan programs are available. So a lot of people in this area got wiped out during the last crash. So it's one of the things I would ask right up front, so that you can, when you call the lender, you let them know.
And you kind of hit on that too, Joe. These are credit challenges that they may have had. So again, people will open up to you more so than you would believe in this process. Don't be afraid to ask the questions, because that's, again, you're building trust in yourself with them by doing these kinds of things, and it shows your professionalism, okay? Then you'll talk about the home search. That's where you'll ask where they want to live, how many bedrooms, how many bathrooms, what are their wants, and what are their needs, and what's really important to them. And then this is where you'll talk about, hey, if we don't have this, would you still buy that house? So you want to start to kind of pre-close them on when you go out to see properties, right? So, okay, so you need to have a two-car garage, but your budget's $350. If we found one with a one-car garage, would that be okay? So you want to start to set the right expectations of what they can potentially buy, but also get them to weed out what's a need and what's a want, right? So, and then you'll point out stuff as you go through the house, and you'll say, you'll point out flaws, things along those lines. So it's really important for them, again, to see that you know what you're talking about when you're looking at houses. And then you would go into working with new homes for sale by owners when they see signs that you can still help them through those processes, and that there is a role for you in each of those processes. And so you're ahead of the game there with the buyers on that. Then you'll talk about negotiating the contract once you do make an offer on the property, how you come up with the price, whether it's through working with the Home Pricing Wizard or CMA tool that you use, RPR or Cloud CMA or whatever you do there. And if they encounter multiple offers, how you deal with that. So becoming familiar with this process, again, shows your professionalism, shows them why it's important to work with you, more so than any other realtor, because you're going at length, in depth on the whole process. You'll talk about home inspections, what the home inspections entail, what the home inspector is going to be looking for in the house, what the time frame for that kind of stuff is, and that you're going to review the HOA docs for them, make sure that there's enough reserves, make sure there's not many delinquencies, see if there's any special assessments, things along those lines, so that they're going to get the house and the property with no surprises. And then you'll talk a little bit about having strong affiliations like we do with Josh, mortgage, title, also home inspectors, insurance companies, things like that, so you're working as a team. And then lastly, you'll talk about being a buyer agent for them. And once you go through this whole process and you explain how you get paid and how it's not going to be any out-of-pocket expense to them, that the money's being, or that your fees are being paid by the seller, and you can represent them and be accountable to them, and disclose everything you know about the property to them, be an advocate of their offer, negotiate on their behalf, and you've shown them your knowledge in the business and about the process, they'll have no problem signing an exclusive right to represent buyer agreement with you at that time. Okay? So you want to also, part of the search process, is how long is their lease, if they're renting, how long is their lease for? Can they break their lease if they find the right house? Sometimes it's a $250 fee to break it. What type of property interested in owning? How long have you been looking for a home? How many have you seen on the inside, not just online? Ask them if they've met with a lender, because it's important to know. Ask who that lender is. And do you want to go into the different types of lenders, Josh?
Yeah, so
This is important.
just like with real estate, there's people at all varying levels of business prowess on our side. So there's brokers. Broker basically means that they are a third party between an institution and a buyer. So the challenge with brokers is they don't have any control over the process whatsoever. They don't have underwriting in-house, they don't have closing in-house. They're just literally a middleman. And that sector of our business for you guys should probably be the biggest scare.
Red flag.
Red flag when you receive a letter from a true broker. The best and people with the most control are people like businesses like myself, where you're a correspondent lender, which means all of my processing, underwriting, and closing is in-house. It's all right out of my Fairfax office. The true large banks of the world are going to have varying degrees of competent loan officers. Typically, you see with the larger banks that most of their really good lenders have already left because they had a really hard time closing on time, because underwriting will be in California, closing will be in Milwaukee, and it's a significantly disjointed process. Most banks are truly banking institutions with a mortgage arm, so a correspondent lender like myself, all we do is mortgage finance. It's literally all we do. So we take it really seriously, and we're really good at thinning out that process. We can close a loan in 15 to 20 days if we have to, so it's a significantly different experience.
Right. Joe, you want to add a comment?
I want to say that another group is credit unions. And just be aware that not only are you looking out for your buyer and the service that they get from whatever lender they choose, but you're submitting a letter with that contract to the listing agent. And there are a lot of listing agents who have biases against certain types of lenders, primarily brokers.
Right.
Some people don't like credit unions.
Online lenders too are.
Yeah, online lenders. So if you can present a letter that says it's from a direct lender, you're standing a much better chance of making that seller feel comfortable with your contract. So that's, I think it's really important to understand that it's not only for your buyer. And credit unions, by the way, I'll tell you, I don't, because I can call up Josh or the lenders that I deal with and find out what's going on with the process. With the credit union, I have.
We'll not talk to the lender, we'll not talk to the listing agent or the buyer's agent.
Right, and
So you
so
can't
communication of
get
the process is difficult. For the buyer, there's some great things with the credit unions, but for the realtor, they're more difficult to work with.
Right.
They settle on time, but they're difficult to work with.
So what I tell people with a broker is the broker is looking out for the broker's best interest. A shoe comes in and he applies and he gets a 30-year fixed at 3 3/4. Brexit happens, and so he's giving this loan to Bank of America. Brexit comes in, you're locked in with me for 3 3/4, and the interest rate goes down to 3.5. I'm switching that loan over to SunTrust, and I'm going to make more money because of the spread, yield spread premium on 3 3/4 from 3.5. So they're not really looking out, and my experience is, for the client's best interest. So, and again, that will start the whole process all over again because there's different underwriting guidelines, different processing guidelines, and it's going to go to somebody different. So brokers are bad news for buyers, in my opinion, your opinion, your guys' opinion. Okay, and Josh hit on it. There's multiple locations that, origination, processing, underwriting, and closing all happen across the country. And so it takes more time for that process to happen. And therefore, it creates frustration. Also, one of the biggest things with underwriting is going to be appraisals, right? You have the written appraisal here, and it goes to Kansas City, Missouri, and that underwriter is having a bad day, and they say, there's no way that house is worth $350. That house here is only worth $175, and they knock down the appraised value. So that's another reason to avoid banks, I think. Credit unions in USAA, we talked about the lack of communication is probably number one. Also, in dealing with USAA, again, they are great with their client, who is the borrower. They're not great with us as realtors, and even so, the title companies. But USAA will send an appraiser from Baltimore. Or one time we had one from Delaware. And how do they know our market? Just because they have access to our MLS does not make them experts in our area for doing that. So there's a lot of different things, but lack of communication, when you guys get into this, you need to know something, you need to know it right then and there for your clients. So you need to worry about that. And then online lenders, there's just no control. There's nobody that you can go over and strangle, like Josh. What's going on, right? And because they don't care, they don't know you, and they will get your client's information. It's just bad news all the way around. So when you meet with your client and you tell them these differences, again, you're demonstrating your value, and that's why it's important to talk about financing and just not turn them over to a lender.
The online lender world is very similar to what you guys compete against with the Redfin world, right?
And Zillow.
It's discounted
Yes, sir.
service, discounted agents, and typically a huge lack of experience. So we'll find like a lot of young people or a lot of people who don't really want to get all the way into the business for our side, start there, because it's almost all automated. So if it doesn't fit within this perfect little box, that's when they have problems.
Well, I call that bait and switch.
Yep.
They won't be able to deliver the product at the price they say that they can deliver it at. So,
The other thing that's a little bit unique in particular to our company is I'm backed by a bank. So I've got a bank that provides me with what's called portfolio money. So when a loan has one or two parameters that fall outside of normal guidelines and there's a 20% down payment, a lot of the times it's something that I can do on my portfolio if it makes sense. A perfect example is an attorney. He's been working at the same law firm for 20 years. He's been paid a salary, let's just call it $300,000 a year. Guy makes partner, right? He's going to be making probably $600,000. He changes from a W-2 employee to a 1099 employee because now he's being paid off with a profit. If you don't have a 2-year history of being 1099, you can't do a conventional loan. So a guy who's going to be doubling his income can't get a loan because he hasn't been a partner for 2 years. That's something where if I've got at least a history to show what his payouts are, even for a year, that I would put on my portfolio all day long. So I'm a loan officer for my company, but I'm also our company's chief lending officer. So it's my personal job to review every loan that goes to our bank's books. So we've got a huge plethora of portfolio loans that are specific to loans that just barely fit outside the box but make a lot of sense. So we also do construction and renovation financing in our area too. That's the thing, is we do, we lend in other states, but our main focus is all here. So we have the local market and we control our appraisers in terms of knowing who's on our list.
right. Which that's the appraisal piece. When you're dealing with the bank, you're going through an appraisal management company. So it's going to be kind of what,
Yeah.
it's going to be kind of luck of the draw, so, of who you get there. So, again, the more you can demonstrate value, the more likely you are to get referrals from these people. The other thing is, when you're pre-qualifying these people, how long you've been looking for a home, why are you looking to buy? I mean, that's an important thing. Looking for tax benefits, looking for shorter commute, looking for school district, and these are all going to be questions that you're going to need to find out. What's the most important room in the house? What are your must-haves? What are nice-to-haves? Is the money for your earnest money deposit and down payment readily accessible? You need to know if they're getting money from China, that it's going to take time, or someplace in the Middle East, it's going to take time to get that money in, or if they have to liquidate stocks, or if they have to get a loan against their 401k. So you want to know that question in advance so they can start to make arrangements to move forward with getting that money readily accessible to them. And then, what are your expectations of me? We talked about that a little bit. And then you also want to tell them what your expectations of them are. And then ask them what other questions they didn't cover. Can you think of any other questions that you think might be important? We're going to have, as part of this program, we're going to have, maybe we'll have your dad do the buyer presentation. He did it before for us. Chris Dominic's done one before, where they go into more detail on this stuff. But I just kind of want to give you an overview of what's important. But yes?
I have a question. I know you're supposed to get the buyers to sign the exclusive right to represent them.
Mm-hmm.
Do you draw a line? If they're not willing to sign it, do you say, I will not take you out?
Well,
I
say
mean,
it's against the law. It's like speeding at 100 miles an hour, you're going to get caught.
So it's an absolute requirement.
Right, say, look, I can do it for one house if you want to do that, or for one day, and we can go look at houses. But I think once you get, and somebody comes into the office and you sit down and you go over this with them, typically it takes an hour to an hour and a half. They're going to be wowed, and they're not going to want to work with anybody else. And if someone isn't, after they invest that time with you, willing to sign with you, say, how come you don't want to sign something that's law for me to have you sign? Why do you want me to break the law? And most people are like, well, I don't want you to break the law. Paul?
Yeah, they'll always be able to find somebody else that will take them in without the paperwork. But I found that it's not worth taking a chance, number one, in case you get audited. But more importantly, it's showing that they're not committed. And I let those guys go. I always let them go. The only time I ever look the other way at first is if it's a past client or somebody I have a very close relationship with that I trust implicitly. Otherwise, I insist on that, and if they don't want to do it, I'm fine with adios, because they're not going to buy the house. They're looking, or they're thinking, or they've got somebody else in mind that they're going to use, but they're not available that day. There's a lot of that going on, so I just...
Yeah, especially this time of year,
Yeah.
people on vacation.
Right,
Yeah.
so it's not worth it. It's just
Right.
not worth it.
And that's, again, that's why it's important to have them come into the office and sit down and meet with you. And if they're not willing to sit down and meet with you, they're probably not going to be willing to sign the buyer broker agreement or the exclusive right to represent tenant agreement. So those are people that are better to let go than to try and chase down and do what they want versus you controlling the situation and helping them get what they want. That's really important. So some of the questions that you guys, I think, need to be prepared to answer are, how long have you been licensed? Now, typically, we don't see that with RE/MAX because the consumer thinks that RE/MAX agents are already experienced agents. Have you had that question come up?
No, in 4 years, I've never had
Never had it
ask
happen
me.
in
I
4
worried about it a lot when I first started.
But it didn't happen.
Never been asked.
Well, you weren't worth RE/MAX always. How
Well,
about you?
well, I had that question early on. I said,
But you weren't with RE/MAX early on.
no, but yeah. but I
Yeah,
said-
when you were with a small company.
I just said, it seems like forever.
There's your answer, seems like forever. Have you all been asked?
Lost. Yeah, that's what you said.
Yeah,
You have not? What's that?
They asked me how old I am, but not
Right. How old are you?
23.
23, that's good. How many times have you been, Sienna?
Just one.
Yeah,
I've got 3 referral clients that I'm working with.
right,
Only one of them asked, so I'm just like holding my breath. I hope the other 2 don't ask. but
right.
I just,
Have you have been in a situation yet?
no, but I'm nervous for that question.
Oh,
Yeah.
yeah, me too.
Okay,
If they
Say
ask
so
you,
it's
just
just my first
seems
year.
like forever.
Yeah.
What would your
Just,
answer be?
if I were asked, and anybody younger than me that's starting, I tell them, just let them know if they point blank want an answer, tell them that you're on a team of experienced agents, and if you don't know the answer, you can get them the answer quickly. You've got your brokers and your mentors and everybody else.
Your lenders,
Right.
there's people.
Just be honest about it
Yeah.
because they respect it.
Yeah.
Right. And then, how many houses have you sold? So that's another one that may come up, right? Well, we have sold,
Right.
many houses. We
Yeah,
sell many
that's-
houses every week.
I've done that. So find out from Scott what our number is for the year at RE/MAX Gateway, and that's how many houses we've sold this year.
Yeah, last week we sold 28 houses. So
Yeah.
we sell houses all the time. So we're really there, we're experienced, we can help you with helping you find the right house. How familiar are you with the area I'm looking to buy in, right? If they're looking in Old Town Alexandria, you may not want to deal with them just because although the prices are great, if you don't live in Old Town and you're not familiar with it, it can go street to street there, right, and block to block. So you don't want to get yourself involved in a situation that you're not familiar with. So, but you could get...
Different animal.
Yeah, you could get asked that question. And also, some streets have different school districts, especially out in Loudoun County. And don't you have to wait in line now to get into the school?
I could literally throw a football to an elementary school that I'm gonna have to sit out at 3 a.m. in the morning and wait to get my kid registered at.
What?
Yeah.
Wow,
Yeah.
how would you do that?
Brambleton.
You're not just
I know,
slinging
see?
your copy of
So don't sell a house in Brambleton.
Brambleton.
Stay in your
So
in your known area, Joe.
No, I'll go to Brambleton.
Even people who live in certain communities still have
Yeah.
to wait out.
So
Um,
I didn't even know.
So it just turns into a bunch of parents drinking at 3 a.m. waiting out.
on school property.
Basically on school property.
Yeah, right. Isn't that against the
No,
law?
I'm serious, I mean, this is a public school and you can't
Yes.
get in?
Yes.
Oh, yeah. Yeah, I could, like, if I didn't show up, I
What
could have
happens
to
to
pass the school that's right in front of my house.
But you're
Take-
slated for a school, you just.
Yeah, I'm
prefer
slated for
this
that school, but you still have to go register.
I didn't know, like in Prince William, I think you have to have a reason. I mean, do you have to have a reason to?
No, there's, schools are
They're
overcrowded.
so overcrowded that
They
you,
haven't built
in
enough
addition to
schools.
being slated to a school, you still have to go register in time. Or you won't be guaranteed that spot, is what they tell you.
Wow.
Yeah, it's
Right,
insane.
see?
It's
So
like every
that's-
time
these
we
are
go
things
to
that you need
there's
to
like
know.
8 new schools on the.
And so if you don't know, you're gonna get
Built
yourself
like
in
houses
trouble.
out
That's the
there.
second thing I learned today.
Where's the
Right.
Yeah.
trailers?
There's 3 elementary schools within a mile of me. No, 2 miles.
2 miles, yeah, yeah.
It's crazy.
So they might ask, how long does the process take, right? That's a legitimate question they might have. How much does it cost, right? It's not only the down payment, but it's also the closing costs, and you'll get into some closing cost stuff today or no? That's another training.
Different training, but I mean, I can get into whatever you guys want.
Right. How do you get paid? Again, if you go through this process, it explains how you get paid, but that's be some questions that people ask. And then how are you going to determine what to offer on a house? I think that comes up a lot, but what are some other questions you guys have been asked?
What I've noticed, because I've dealt with all this, I've been a young buyer myself, so I look at it from, I deal with a lot of millennials. So with millennials, I'm closer to their age, so I've dealt with the process without not knowing.
Right.
So, but I found out is, you should actually already have a realtor. Because a lot of individuals come, source me for information, pick my brain, as if we're gonna go through the whole process. I've went through the whole process multiple times. And then, oh, I should just tell my realtor this.
That's a great
Right.
point.
Yes, that's one of the questions I didn't have on here.
And
See, that's why we have these classes. This is, I just came
I'm
up
right
with
there
these
with you on the
questions
lending
like
side.
15 minutes ago.
That happens all the time. They're like, great, I'm gonna call Quicken. I'm like, awesome, you're the best.
Yeah, that's
Yeah, so I had to
a
sit
really
luck.
good
down.
point.
Here's my old form, and on here, it said, fax the offer to the listing agent. So that's why I had to come up with these questions. A little bit different today.
Right.
So, but yeah, that's a great question to ask, for sure, dude.
Yeah, also along
Thanks for
that
your
line,
input.
find out if your client has an email account or can have scanning and printing at home, because I have a client right now, I have to drive every single thing to her office because she doesn't have any electronic anything. So any changes, I have to get in the car and drive to her and have her sign it.
That's
and
what
then
they
take
have
it
with
back.
old people like you, not.
Right. She's 84, but she's a great client, so, but it's worth finding out if you need to, you gotta plan on
What you
doing
need to
it.
do, hey, I'll be over at 3 o'clock, can you bring one of your neighbors over? I'd like to meet one of your neighbors.
Right.
Or have one of your friends there, so you can build your database as you go
Right,
over.
right. Make it
good use of the
worthwhile.
time. Yes.
Can
So,
I say one other thing about the types of lenders that just comes to mind? Because Josh is here, not just because he's a nice guy, but because, you know, the lenders just work like us on the referral business, building relationships. And I've been in the business a long time, and I have lenders that I've used for years and years. And they're going to work with their clients to get the loan through. And they're not going to promise and then not deliver, because that's the last loan they'll have. Quicken, in and out, one and done.
right,
You know, and they're here to build relationships, and so I think it's so important to get a great
right.
direct lender.
Josh wants to continue to call in our 6 offices.
Yeah,
Right.
absolutely.
So there, again, he can reach out and you can strangle him, right?
Right.
And he's smaller than us, so it's even easier. He's not gonna strangle back. But, so be prepared to answer questions, because they're gonna have questions of you, right? They wanna know your experience levels, and again, you rely on others, the mentors, the other team members if you're on a team like you, or, you know, rely on the experience of your managing broker and myself. So when you again, present yourself truthfully and factually, people respect you more, and then they're gonna be more willing to work with you. You know what, you're my only client right now, and I have all the time in the world to dedicate to you. As soon as the house comes up, I'm dropping everything to go show you that house, right? So when people appreciate that, I think more so than, you know, skirting issues. But that's all I've got for now. Josh, we'll have you take it away. I'm gonna go get my clicker for you.
Okay.
So you don't have to use the
Thank you, everybody.
mouse pad.
Did you get a presentation?
Yeah. Here, I'll second. That's Connor, by the way.
I'm Josh. Nice to meet you, Connor. As Scotty said, I'm with MVB Mortgage. We've been a partner of RE/MAX Gateway for quite a while. One of the biggest programs over the last really 4 years has been FHA. When you think of FHA, the easiest thing to think of is it's used in low down payment and typically average to less than average credit. Those are typically when you see FHA really become a player. The one thing that is really strong about FHA right now is that their interest rates are lower than almost any program out there. Right now you can get 3.25% on an FHA loan and only have to put 3.5% down payment down. The seller allows you to, it actually allows the seller to pay up to 6% of the closing costs and prepaids, which they're never that much. So it's a really, really strong program for less than perfect first-time home buyer situations. So we're going to get into it a little bit, and maybe. Let's go ahead and just turn the first page. We'll go off of the packet itself for now. So to make FHA training exciting is pretty impossible, so we'll try to blow through the stuff that doesn't really come up too much, but we'll try to clip on the things that really make it stand out. The first slide, it's just the Federal Housing Administration. Basically, FHA insures lenders to provide slightly riskier loan products like lower down payment, lower credit score options. Typically, FHA in this market represents about 30% market share for lenders in this area. So it is a very important loan program to learn. This wasn't flipping through.
No,
so.
this is, you're on this one.
Ah, perfect.
That's why.
So, has everybody heard of mortgage insurance? Familiar with what it is? Basically, mortgage insurance is a fee that a buyer pays to provide the lender with the insurance that if the loan goes bad, that they'll be made whole by whatever institution insures it. So it is typically, with FHA, there's an upfront fee and a monthly fee that recurs. Debt to income ratio is what Scott was talking about before. When we're pre-qualifying buyers, we're looking at the total debts, so it's total monthly revolving debts, car loans, credit cards, auto loans, student loans, along with the new mortgage payment, divided into the gross monthly income. And keep in mind, we capitalize gross because a lot of the times people will give you, when you ask somebody what their income is, quite oftentimes they tell you what their take-home pay is. Okay, when we're running these qualification ratios, it's off of their pre-tax income. So it makes a huge difference in terms of what they qualify for. Reserves is simply how much money do they have left after closing. Okay? And this is important because based on the loan amount and the loan program, if they have just enough to come to closing but not any money left after, sometimes they won't qualify for certain programs. FHA is really lenient in this area. And then FICO. FICO is just their credit score. So with any loan program, we pull credit scores from Experian, Equifax, and TransUnion, and we use the middle of the 3 scores. If for whatever reason there's only 2 scores, we use the lower of the 2. So that part is really important. So mortgage insurance, we